PB Fintech. Well, during its recent analyst meet, they indicated they're going to be turning profitable soon. In fact, CLSA, they have an outperformed rating on the stock with a target price of 720 rupees. Mr. Yashish Dahiya, the chairman and CEO of PB Fintech, joins us on the show. Hi, good morning, sir. Thanks so much for joining in. Well, on the net profit front, you have guided that you turn profitable in FY24. Do you stick to that? And then you see the profit number moving to around 1,000 crores in FY27. Just want to reconfirm the net profit number. And also in FY24, what kind of an improvement you're expecting in the adjusted EBITDA? Because a lot of brokers, they're looking at their numbers, they are factoring in a swing of around 250 crores in the adjusted EBITDA. Your take?
No, all of those are correct numbers. So, yes, we will be positive at the PAT level this year. And yes, we have guided that in 27 we should make more than 1,000 crores of profit. And yes, the delta over last year to this year on the adjusted EBITDA front should be about 250 crores. And actually on the EBITDA front, it will be a little higher. It would be, so at the EBITDA level, I believe the difference should be almost 400 to 500 crores of delta from last year.
The adjusted EBITDA front, just to reconfirm this, we got the PAT number out of the way, but last year the adjusted EBITDA number, I think, was around a negative 120 crores. So on that, you're saying a delta of around 400 to 500 crores?
No. Adjusted EBITDA would be about 250 crores. You were correct in that assessment. However, on the EBITDA front, it should be a little more than 500 crores difference from the previous.
Okay. So since you're quite optimistic, Mr. Dahiya, I just wanted to understand what are the growth triggers now for PB Fintech over the next 1 to 2 years? And where does the credit business fit in? I mean, in terms of both growth, profitability, what are we looking at over there?
See, every time we are a contribution positive business, right? So we make about a contribution of 44%. So if our revenues in general go up by 100 rupees, that almost means 44 rupees of contribution. And what that applies is that as long as our fixed cost does not grow faster than revenue, that means there's a flow through to the bottom line. It's a pretty straightforward business. There's not much complexity in it. It's just the growth of the revenue, which leads to higher and higher profitability as time progresses. And yes, we should expect, maybe a 600 crores growth in revenue, and that should lead to about 250 crores growth in the adjusted EBITDA level.
Sorry, the reason I asked you is what the growth triggers are is because there is a lot of disruption in your space as well that's expected over the next, 12 to 18 months. Any kind of strategy to combat competition, and what is the plan as far as, what do you see as the big growth levers for the company over the next, say, 12 to 18 months?
See, I think, disruption in our industry is very poorly understood. And the reason I want to say that is for the last 15 years, everybody's been promising disruption in the next 12 to 18 months. But those 12 to 18 months have not come. And I think the 12 to 18 months are not going to come in the next 12 to 18 months either. It's just because I think people don't understand what we do, that people somehow believe something. What we do is a pretty hard thing. It is convincing people to buy health insurance and life insurance. There is no disruption that can make people suddenly buy a lot more health insurance and life insurance. It's about, if you think about yourself, why would somebody spend 20,000 rupees for something that they don't get almost no benefit out of when they purchase it? But maybe one day if they fall sick or if they die in an untimely manner, their family will get financial support. It's a very complicated product. And I don't think people understand that when they believe something very simple is going to, cause any disruption. And as I said, it's been promised for the last 15 years, but we've been waiting. And I don't think we need to wait any longer because I don't think it's coming anytime soon.
Just want to get in a structural question. Over the next 4 or 5 years, can your contribution margin, which currently stands at 44%, as you told us, can it move up or does it stay at these levels?
It naturally moves up, and I'll explain. See, our renewal business, we have two parts of our business, right? There's a core part of the fresh business we do, and then there's a renewal. So the renewal business is substantially more profitable. And so as we get older, our renewal business becomes a bigger and bigger part of our overall business. And that automatically implies that there is a margin enhancement. See, at a very fundamental level, we do a very hard business, which almost nobody else does, not just in India, but nowhere in the world. And that business is badly misunderstood, but it's a pretty straightforward business. Every time we are able to sell a policy, we make a lot of money. And that money does, as we sell more and more policies, we contribute more and more. And
so when you give us a guide,
yeah.
So you've given a guidance of 1,000 crore of a profit number by FY27, right? So
Yes.
with that time horizon in mind, what do you think the contribution margins could stand at?
I think I haven't thought through that in a because 1,000 crore guidance is a very rough guidance. So I haven't really thought through that, but I would hope it will be upwards of 50%.
Okay.
But let me just explain, right? In the last year, you saw our profits change by 500 crores. This year again, you will see a very similar change of about 500 crores. And we will be PAT positive. Now, there is no reason that in the next 3 years, you shouldn't see, shifts towards the positive. And I think that is really where the 1,000 crore number comes from. It's a very simple calculation. There's nothing very complicated
So
about
tell us
it.
the calculation, Mr. Dahiya. You said rough. How does this 1,000 crore profit number come?
Look, if you look at last year, we had 600 crores of ESOP charges,
Okay.
right? In the 2027, that number is less than 100 crores. So you have a 500 crore delta from just the ESOP charges coming in. So we, our core business, even last year was profitable. This year will make about 300-400 crores of profits. So I think we are a very misunderstood story. Our core business already makes about 300, like this year is going to make about 300 crores of profit. And I think it is just because of the inflated ESOP charges that we look like we've been making losses in the past. And of course, there's a renewal stream that grows faster. So I think these are, by most of the analysts now, these are increasingly getting to be fairly well understood numbers. Just our renewal business alone, by a simple calculation over the next 3 years, creates an additional business or a revenue or a contribution, of about 400 crores. Just that part, right? And it's been doing so in the past also. Last year also it did about 100 crores. So there is nothing new about it. I think it's new initiatives and ESOP charges which confuse the story. And it's okay. I think most of that is behind us.
So, I guess the overarching theme is this whole online insurance space, right, which has been growing quite a bit. And anyone and everyone is trying to sort of grab market share. Just wanted to understand what is your market share currently and how much, of course, you are the market leader, but just wanted to understand how the dynamics are working currently. And what do you think the compounded growth rate of the industry could look like, say, over the next 1 to 2 years?
See, let me try to give you a base story. India's nominal GDP is growing at between 13 to 15% every year. So if we have to even maintain our insurance penetration as a country, we have to grow at about 13 to 15%. Within that, health insurance and term insurance seem to be underpenetrated segments. People need them quite a bit. So they should ideally grow faster than this. Online should grow a little faster than that. There are a lot of things we are doing which should make us grow faster than that. So I think on the whole, a 30% kind of growth for us seems to be fairly normal. But I'm not talking about 2 years or 3 years. I'm talking about a 10-year, 15-year period that this could be happening for. Now, you mentioned competition. I genuinely, and I'm not trying to make this up, I don't even know the name of our competitor. That who is the competitor who's selling health insurance and life insurance in the market from a comparison standpoint, I don't even know who does that. And I don't think that's an easy problem to solve. I hope more and more people do it, because that will only grow the market and also make us grow faster. Please appreciate, always competition makes you grow faster.
Right. Just to reconfirm those numbers for this year, Mr. Dahiya, you're expecting revenues to grow by 600 crores. The EBITDA, adjusted EBITDA swing will be 250 crores, and the net profit turns is positive, right? The reason we're asking you, sir, is because there were a lot of numbers that came out. So just want to reconfirm those numbers.
Oh, no, sure. See, our revenue will grow by about 1,000 crores. I think let's wait and watch. But we don't give too much guidance into the future. I think the only number that we have said is we will be PAT positive. Right?
Positive. Oh, all right. And you've given us a few more numbers in this interview as well, which we have taken down. Now, final question, Mr. Dahiya.
Don't hold on to them. I could be wrong also on those numbers. But I think the PAT positive will happen. I could be very wrong on any of the other numbers. Don't worry.
But
as of 3 numbers out, which is 1,000 crore profit in 27, being profitable this year, and in the last quarter being EBITDA positive. Those were only 3 numbers that we put out in a serious manner. Rest, everything is we're just talking. That's all. So don't take them too seriously.
You're aiming to at least have an adjusted EBITDA swing of 250 crores, right? That's the other aim that you have.
That is us conversing. If you come and ask me after 2 years, you said this, then you said this. No, nothing of that sort. The only thing that really matters is being PAT positive. Right.
All right.
To do that, of course, you'll have a few supporting numbers that have to happen.
Okay. All right. Final question. That the street is a little bit cautious on some supply. Tencent Cloud Europe BW, they had some stake. I think they had 8% stake, and they sold some portion of that. Any further clarity with regard to whether or not they want to further bring that down? 2% was sold at less than 600 rupees.
The only clarity I can give you is we don't speak to our shareholders in terms of who is selling, who is buying. They are all free to do whatever they feel like. They have their own reasons. And I don't think we either get to know that, because most of it is done through bankers. They don't contact us to tell us we are about to sell or anything of that sort. And I think the bankers usually have pretty good knowledge of what's going on, but we don't. We usually find out after the event has happened.
Okay, well, we got an answer. Thanks a lot for joining in. Appreciate your thoughts, and all the best for the future. That's PB Fintech.